Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Monday, January 30th, 2023. Before we look at the charts, just want to encourage you to please click like if you haven't already. It helps us out a great deal in being found on YouTube with regard to their algorithms. The number of likes per views is really important. Also, subscribe to the Wicked Stocks YouTube channel if you haven't already. It will provide you notification each and every time the daily Tesla report is uploaded for your viewing. That also includes the daily Apple report along with other stock picks we do put out occasionally through the month. And please share the content, if you would, with friends and colleagues. So let's take a look at the charts. I will start with this big picture and work our way in. We came off these channel structures, these channel bottoms about a month ago, presently between 89.41 and 101.12. And on the way up, we also closed last week for the first time back above this meaningful channel resistance, now support. On the weekly chart, 155.98 to 164.09. On the daily chart, that 164.09 is actually 165.39. So that is your daily level. If we happen to test it today, we might actually pull back. The volatility would certainly allow that. And I've got 158.19 that I'll be showing in just a moment. And so now, having settled back above this important threshold, a threshold that actually held selling pressures for 5 or 6 weeks back in October, November, before collapsing below it and then testing this structure. Now we're back above it. And it looks to me as if this market wants, over the next few months, to push back up to this long-term channel top that is presently at 258.62 and dropping. I've been mentioning the 230s, 240s, and as we move into March, April, May, it will be in the 230s and 240s. So that is our 2 to 3 month time horizon. Now, there are, and I do need to want to mention a couple of things about the broader market. You know, Tesla being a component of the SPY and the Triple Q, or the S&P 500 and the NASDAQ 100. And I say this with some degree of reluctance, I'll be honest. I have premium subscribers who pay for this information, daily SPY report, daily Triple Q report that they get in their monthly subscription. But I do think it's important to sort of drive home the point that both the SPY and the Triple Q, which I'll show in a moment, have meaningful headwinds, that they're approaching an important resistance area. The SPY at 411.88 all week, and the Triple Q is retracing back to a significant zone of resistance in the low 300 area this week. These are weekly charts, 300.35 to 304.37. So both of the indexes, the S&P 500 and the NASDAQ 100, have room for continued gains this week, but pretty soon, and possibly early this week, Monday, Tuesday, they can wind up testing meaningful overhead resistance, both of which can contain monthly buying pressures for both indexes. So you can go back and freeze frame over that. And so I guess the point I'm making is this is not going to be a vertical move from here, despite the fact that last week was a vertical move. You know, you had the favorable earnings, and so here we are. So let's talk about the day itself. I still have 179.83, this former meaningful pullback low for March of 2021, as a session containment level that did hold last Friday's high. We pushed through it a bit, less than a point, and backed off to close just below it. So let's work our way down from there today. 172.94 I don't have labeled, but that is a long-term 5/8 Fibonacci from the March 2020 COVID low against the all-time high in later 21. They still can behave decently on an intraday basis anyway. 172.94 could contain intraday selling. If we break it, 165.39 is in reach. And once again, I don't show that on the daily chart anywhere here, but I'll just remind you that it is this channel structure on the weekly chart at 164.09. On the daily chart, it comes in at 165.39, and that is backed up by 158.15. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So let's Actually, I'm going to go to this chart here. I think this says it pretty well. Actually, this says it best. All right. There's a lot going on here, and I show it all. We've got channel bottoms and speed lines and such, but it really is this rising 1/3 speed line, a new one based in part on last Friday's high. And of course, you've got 165.39 that I've already mentioned as that long-term channel structure, and the low of last Friday is 161.17. And for today, it's pretty significant. If we push into new high territory, if we take out Friday's high of 180.68 by a degree and then fall back later in the day to close below 161.17. That is a key reversal high. I believe in candlesticks, it's the doji star. That is a sign of an overbought market, and we should then continue south. But I'm just going to round down to 158.19. This is a wide zone, but we have high volatility right now. So if we break 165.39, I think 158.19 is in reach. If we close below this zone between 158.19 and 165.39, which is narrowing into midweek, then we have a good high for the week and probably into later February. I think then, I don't think this volatility will continue. It may for a day or two, but I think this will take the better part of a week. It may even spill into next week before reaching the 130.03 target. 130.03 becomes an objective. Right now I'll say 3 to 5 days with present volatility, but it could stretch into the better part of 2 weeks. Following a settlement today below 158.19, this rising 2/3 speed line able to contain weekly selling pressures, and from here we may actually bottom out into later February and just sort of take it one day, 1 week at a time. It is stair step on the way down. I'm not expecting that if we were to close back below that 165.39 area, let me go back to the weekly chart. If we close back below this zone here between 155.98 and 164.09, I'm not expecting an imminent collapse back to 89.41 to 101.12. And now it may happen within a matter of a month or two, but I wouldn't expect it. What I would expect at the very least would be 130.03 if we close below 158.19. And then if we close below 130.03, then yes, falling back into the 89 to 101 region, that long-term channel structures that actually performed pretty well about a month ago in containing monthly selling pressures. At the time, I was indicating monthly containment back up into this zone of resistance, but as it turns out, we've pushed right through it. And so let's get back to, I'm just going to remind you again that the SPY 411.88 has overhead resistance all week, and the Q in the low 300 area all week. And the reason I'm driving home that point is because there are some upward hurdles that the Tesla will be encountering if it's going to continue rallying as it has been. Now, this has been a pretty vertical move. This is an earnings-based rally, of course. And so our next significant overhead resistance, and we may actually reach it this week. In fact, I'll say working upside that if we push or open today above 179.83, 186.26 is likely, and if we close above 179.83, this 195.29 new descending 1/3 speed line, new based on the low from about a month ago, is in reach. So closing above 179.83, 195.29 is likely within a day or two. In fact, holding above this 158.19 to 165.39 area that I've already outlined will keep 195.29 in reach this week. And this is the correlate, I think, to those SPY and triple Q levels that I mentioned a moment ago. And so we could top out at 195.29 for the week and fall off. If you are how should I put this, skeptical of this rally. If you think this is a rally to be sold and you're just sort of chomping for the opportunity to do that, in my opinion, the next sell on strength is 195.29. And we could fall off from here. But I do think, and I'll go back to the point that I made originally, is that the fact that we closed above this structure tells me this market wants, if you will, over the next 2 or 3 months to push into the 230s, 240s, where it encounters significant overhead resistance presently on the daily chart at 260.11. Continuing with the upside, if we close any day this week above this descending speed line, and I'll be showing this on a day-by-day basis, we enter another buy signal that it could within 3 to 5 days. But once again, this volatility, this vertical move is going to tire itself out at some point. And I think it'll be around 195.29 where it could tire itself out, fall back into the 150s, 160s. That I've already shown. Well, I'll show it again right here. Within a week or two of doing so, and then we could trade inside that zone for a week or two as this volatility then begins to settle in. But then closing above 195.29, 2 to 3 week target at 221 and a quarter. This is a long-term 3/8 Fibonacci, A, B, the extremes over the last year and a half. And then finally closing above 221.25, 260.11. That long-term channel top, which, as I said earlier, I think is a realistic 2 to 3 month target right now anyway. And I'm just outlining your hurdles on the way up right now. 195.29, respectable resistance, able to contain weekly buying pressures. And from there, we can quite easily fall back into the 150s, 160s within a week or two of doing so. You know, I don't like to go past 10 minutes on these, so I'm going to leave it at that. Thanks for watching. Please click like and subscribe. I'll be back tomorrow with Tuesday's Tesla report. You have a great day.